This video is sponsored by BitGet, the leading cryptocurrency copy trading platform. Earn 10 USDT for free plus 10% rebate on your first deposit by signing up using the link in the description below. Good morning everyone and welcome to a new video here at Sublime Traders. I'm Logical Orange, and in today's video we are going to talk once again about the Fibonacci retracements. How can we create a profitable strategy with the Fibonacci retracement tool? So without further ado, let's go into the charts. So the Fibonacci retracement levels, what are they? I'm not going to go very deep into this because we already have a video on this. You can check it out in the link in the top right corner of this video. But just to freshen up your memory, for those that don't know, the Fibonacci retracement levels are horizontal lines that indicate where support or resistance areas occur. So now we see lines here, but we need to treat them as areas, as supports and resistances. So right here, for example, we have a resistance and support area. We need to treat the Fibonacci levels in the same manner. They also are areas with a concentrated point on the line. So this is a very simplified definition of the Fibonacci levels. And for the purpose of this video, I even simplified the Fibonacci tool itself. You can find it in the TradingView toolbar right here, and you can plot it from top to bottom, from bottom to top. We will see how we plot it depending on the trend that we want to trade on. But for now, just going into settings, we are going to simplify this. So if you guys want, you can copy my my settings right here. Basically, I just chose to show certain levels, and when you go on the bottom part of your Fibonacci retracement settings page, just make sure that you have checked or unchecked the Fibonacci levels based on the logarithmic scale if you are looking at the logarithmic chart. There are some differences and they might produce some errors if you trade the wrong ones. So now we are going to start with the longs. So in order to start trading longs using the Fibonacci retracement tool, we need to identify a bullish trend. So in order to identify a bullish trend, we are going to use two simple methods. The first one would be to identify the top, so the swing high of the local candle formation. In this case, it just happened. I'm using the replay mode in TradingView in order to have the candles that I want to explain on. So in this case, we have had the swing high right here, but now at the given moment right now, we are here and we have seen that the candles have been starting to retrace from this swing high and are heading to lower levels. So now I have two levels that I need. The first one is the swing high, and the second one is the swing low, which is the basis. This is the point where I start drawing my Fibonacci level. So already talked about the three levels that are extremely important. Right now we need to have another confirmation and see where we will go with our stop losses, potential retracements in this whole formation. So we are going to treat this whole formation right here. The second option we need to have is to have a SMA or an MA that shows us the relationship between the price and the moving average. So if simple, we already talked about this in previous videos, if the price is above the 200 MA and we are now on the 4-hourly chart, and we have the 200 MA on the 4-hourly chart, so it takes a lot of data into account. If we are above this 200 MA, we are in a bullish trend, and if we go below this 200 MA, we have been starting a bear trend. So, of course, we have some possibilities. The price would go to the 0.38 and retrace. This would be one possibility. The second possibility would be that it doesn't hold here and heads to the 0.5. The third possibility would be, and retraces. The third possibility would be that it goes, it doesn't hold any of these levels and continues to the 0.618 and retraces from there. And of course, we have two more, the two most important when managing risk also, is the assumption that it will not hold any of these three, and it will head to the start of the trend, which happens on big market retracements. And the last possibility, that it doesn't hold any level at all, so it heads down under the under the 1 level, so the starting point of the trend. Now we also take the moving average into consideration. I just plotted a potential move of the moving average according to this chart. Now, when the price closes around this level and it is under the 200 MA, under the starting point of our trend, we no longer think that the market can retrace. We no longer think that we will start having a bearish mindset, because right here we will be inverting the chart and we will start to be looking for shorts. So invalidation point for retracements right here. So do not look for rebounds from levels like this. It will be lost trade. So you have a lot of chances to lose that given trade. So now we have our trend. We have our possibilities. Let's continue and see how we trade based on these levels. So now we will just assume that the price will react to one of these levels. But first we will need confirmation. So now we have our lines. We are going to wait for confirmation, and this would mean that we would like to see the price react to either of these three levels. So the 0.305 and 0.618. And now if we play the chart, so we will play the replay in replay mode, and I'm going to stop on the first touch and explain. So right now we have had the first reaction. Is this enough? Would you trade? Would you place a trade according to this? Being that the ideal take profit right here would be the 0 line, so the top of the swing, and the stop loss would be around here. So if we were to place a trade, it would look something like this. So risk reward ratio of 1.5, which is acceptable, not ideal, but acceptable. But so we have a good, an okay-ish risk reward ratio, but are the candles saying that the price has indeed rejected from these levels? And I'm going to say no. Why? Because, well, the first candle, it does look a bit bullish. I'm not gonna say no. It looks like a hammer. It does have a small shadow above, but it is not enough. And the candle that is following it is not looking good. It did not close with the full body above the previous candle. So for now, I think that I'm going to wait and see what happens. And now you guys are going to say, yeah, but you already know what happens in the market. Yes, I do what happens in the market because I'm in replay mode now, but the price tends to react in the same manner in other situations. So we are going to study another situation just after. So I don't have the confirmation yet. I'm going to wait. If we close below above this level, we might have the confirmation that we are waiting for, and we might plot the trade. However, if we have a close right here, well, our risk reward ratio will get lowered. So we have less than 1 risk reward ratio. For me, this is a no-go. So I would not frankly be trading this formation right here because of this week mainly. This week, this long week right here is stopping me from taking a trade right now, because one, it messed up my risk reward ratio. So the distance to the stop loss is very big compared to the distance to the potential take profit, which is right here. Okay, of course, if I'm looking on higher time frames, I can go with the take profit a bit higher and then move on from there. But I'm just looking at this situation right here. There will be a lot of times where you will not be able to project higher. You will just need to take the local formation into account. So that's why for now I'm going to skip and I'm going to play and see what happens with the price. So we just saw that it boomed to the downside, so it would have gone to the stop loss. Now we have two new candles that look more like reversals compared with the formation that we had here. So we didn't have a lot of volume, and the full body of the candle is kind of low. The following candle is similar, and then we had a drop which would have stop lost me if I would have taken the first trade. But now we have had a clear rejection on the 0.5. Doesn't really happen a lot on the 0.5, but this time it did. So the first continuation candle for the retrace after the swing high has not has touched of course the area for the 0.5. So this would be the area for the 0.5 more or less. We base our 0.5 on previous candles also. So one rejection, the second candle just dipped below it, and now right here, so on this first candle I would have not entered. I would have waited for the second one, and right now I can indeed project a trade, and I will base my stop loss on the first level that I have. So I can wait for a close right here. I usually like to wait for closes. I don't always enter directly. So now I can project something like this with a take profit on the 0 level with a good risk reward ratio. 1.76 is not that shabby. And now let's see what happens. So yeah, price has indeed touched the take profit. Also, what you saw here happens a lot, guys. So 60 to 70% of the trades that you think of, not the stupid trades that you go into market buy with. So 60%, 6 or more, even more percent of the trades that you think of, so really thought of trades positions, would first go against you. So don't panic. I see a lot of questions from people that are asking me when the price, well, we entered and then the price rejects a bit. People are asking me, is the trade still valid? There is a stop loss. As long as the stop loss is not touched, the trade is still valid. So you need to wait and not panic. If you panic, it means that you have some risk management issues that I'm not going to cover in this video. So this would be for a long position. Now let's look at a short position and see that it is just symmetrically on the other side. And now I'm here looking for a short, and well, I found a very good example right here with the Euro USD dollar, and we have the things that we want. We are under the 200 MA, we are on the 4-hour chart, and we have had a small retrace in our bearish trend. So I'm basically looking for this in a bearish trend, and I'm looking for this in a bullish trend. This would help me plot my my Fibonacci retracements, so I know what levels I'm waiting for. So right now, I'm going to take my tool, and I'm going to start in the top, including a wick, and I'm going to end the Fibonacci retracement at the bottom, including the wicks. So as with the long, we are now waiting for this level to be touched in order to think about opening a position. First, we need to see how the price reacts, and I'm going to play the chart right now, and we are going to see if the price reacts to this. Now, 1 second before we continue. It might happen that the price would suddenly turn right here, and you might feel like you missed out. No problem, there will be other opportunities for you to take. This is not a situation you would like to be in, because as I said, well, in this case, the first target we are aiming for is the 0 level in this case, and the stop loss would be around somewhere around here, because we do have a range, an area. It is not a line. This is the 3rd or 4th time I'm talking about this. They are not simple lines, they are areas, these Fibonacci levels. Okay, so I've had let's say I have had a first touch of the 0.3, and I'm waiting still a bit. Now I have had the second touch, good reject, almost a full engulfing candle right here, and a continuation candle. I think that I can start a short position right here, so I'm going to plot it, let's say somewhere around here, with a stop loss around here, and the take profit around here. The risk reward ratio isn't great, but it is doable, and I have a lot of chances to take profit on it. So I've had 2 rejects. Some would say, yeah, but you have an ascending channel right here, this one. Guys, don't forget that Fibonacci's are so effective. You will learn the hard way. If you are looking at small patterns near Fibonacci levels, you are going to learn the hard way. So now let's continue this and see. Maybe we lose, maybe we win. 3rd reject, 4th reject, almost hit stop loss. And now it is starting to move slightly in our favor. And now we hit the take profit. Guys, it's the same thing as with the longs. Just need patience and see how the price reacts to the Fibonacci levels. If I didn't have this and this right here, I wouldn't have opened it in the first place. But then I had this also. Let's say you hesitated here. In this case, in this particular case, you would have had another chance to take the trade, because you've had another confirmation that this resistance area works. Okay, so this is the shorts. We had the longs. Extremely simple strategy if you are not over complexifying your trading strategies. The 200 MA is really important for this strategy. It allows you to, of course, identify the trends, and of course you can indeed combine this strategy with the Ichimoku clouds. with some oscillators. You can combine them with the Sublime wave indicator. You can combine them with parabolic SAR, MACD, and a lot of other strategies. You can test them on your own. Now, this is all for this video, guys. I hope you really liked it, and I hope I really helped you understand a bit more about the Fibonacci levels, the simplified version of trading Fibonacci's. And I hope you guys liked it. Thank you for watching, and see you on the next one.